Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Man, it's a Friday. It is a Friday, and technology is not my friend today. Hopefully, this goes smoothly for the rest of our time together this afternoon.
I promise to keep myself unmuted so we don't have that problem.
Well, it's all me today. I promise. All right. Plenty for us to get into today. Cold storage numbers came out this week. Livestock slaughter. We're going to talk a little bit about domestic demand here in the U.S. But to kick things off, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, cash cattle were basically steady on the week. Those feeder cattle markets got opened up after the cold spell we came through, and they were also steady on the week. On the future side, the April live cattle futures contract closed down $3.60, and the March feeder cattle futures contract was down 60 cents this week. We did see corn futures, March corn futures up 13.5 cents on the week this week. On the beef side, choice box beef prices up nearly $4. That puts them $34 above where they were a year ago at this time, and we had strength across the board in all those choice beef components. On the hog side, we got stronger cash hogs this week. Barrow and gilt prices up $2.65. Also, that April lean hog futures contract was up $2.70 on the week. We also saw stronger pork prices with the pork cutout value up nearly $2.90 on what was strength across the board with the exception of flat belly prices.
Let's talk a little bit slaughter numbers this week. I know when we talked last week, we had numbers that weren't quite what we would consider our normal or where they should be. Much of that was weather related, but they've seemed to bounce back fairly well this week.
Yeah, that's right. You look at the cattle side, USDA for the week ending February 27th estimates cattle slaughter at 666,000 head. That's up 114,000 or nearly 21% from what was the weather issues of a week ago. On the hog side as well, 2.642 million head of hogs to be slaughtered this week. That's up 210,000 from where we were a week ago, or nearly 9%.
When we look at those numbers, we've seen hog weights temper again and start to slide back a little bit. Do you think we're continuing to maintain and to not back up and continue to work through where there may be issues or be current?
So I think we're okay, Megan. Again, you look at last week, and yes, we were slowed down. And does that back us up a little bit? I'm sure in a few cases it does. It's a lot different backup than we might have talked about back in March and April of 2020. So I'm not too concerned at this point. But to your point, we're full generally in terms of just slaughter numbers, especially really both cattle and hogs, and so we can't have a lot of slowdown without getting a little bit of backup happening.
I think as we talk cold storage and livestock slaughter both, I think the thing that we're specifically on the cold storage side of things, demand for our goods, livestock red meat goods is pretty solid, and that's continuing.
Yeah, that's right. You look at cold storage report that we got out 2021, you take beef, pork, chicken, and turkey, all those meats. We were at 2.1 billion pounds at the end of January. Back a year ago, we were at 2.3. So we're down roughly 11% on all those meats. If you look a little bit species by species, beef ending stocks were up 6.3% relative to a year ago. It's really pork where we've seen the big decline, down nearly 27% in all pork products, led by what were belly stocks. So 31.3 million pounds. That's 56% below where we were a year ago, and among the lowest we've seen since we've kept belly stock data.
Everybody wants their bacon. Do we get worried about that pork belly ending stocks being at such a low level?
So I suppose one could be concerned about that. I think we've gotten so much better at distribution from the time we slaughter hogs until that bacon hits the final retail destination, whether that's the grocery store or food service. But we've probably built a lot more maybe better dynamics there as we've dealt with COVID-19. So we're not probably holding as many stocks as we would have in the past to make sure we had available supplies, as again, just in time kind of delivery, I think has certainly gotten better for us.
All right, let's talk livestock slaughter as we take a look at those numbers. Anything that jumps out to you?
Hey, so it's less production, Megan. You and I for a long time have been on this kick about higher production as we looked at the data that was coming out. You take beef, pork, and chicken production, all three. So January of 21 data that we got out this week says all of those down nearly 6% relative to a year ago. Just as we always talked about, higher meat production creates lower prices, lower meat production creates the opportunity for higher prices. And that's certainly what we're starting to see here. And with the idea that I think we could get some more positives coming as well. You look at beef production, it was down 3.6% in January relative to a year ago. That was with cattle slaughter that was down nearly 6%. And that got muted a little bit by just what was still higher cattle dressed weights, up 2.2% relative to a year ago. Those dressed weights are the highest since November of 2015. So if we start to work through weights longer term, maybe that's even less production and more opportunity for some higher prices. Even on the pork side, 3% less pork production January of 21. That was on almost 5% lower hog slaughter. Again, offset a little bit by what were 1.9% higher dressed weights, some of the highest on record when you look at the hog side of the equation.
Got the last report we're going to chat about today is Restaurant Performance Index. And I think probably one of the most exciting numbers as we take a look at those, not necessarily, but primarily because it means we're seeing some optimism return and some domestic demand return as well.
Yeah, that's right. I want to remind us, back in March and April, we were at like 95 on that Restaurant Performance Index. And when we talk about those absolute numbers, anything less than 100 is contraction and anything above 100 is expansion. So when we got the January numbers here in front of us, they came in at 99.1. That's a heck of a lot closer to being back to maybe where we can talk about expansion going forward. It was up a half a point from where we were in December of 20, so moving in the right direction. For me, we got some recovery after what was a weaker December current situation index. We were up almost 1.1 points here in that current situation index month over month, and some good same store sales data up 2.5 points from where we were a month ago that kind of leads that. So domestic demand maybe starting to show some recovery, and maybe we're seeing signs of, as COVID cases go down, we have consumers ready to go out and eat, and they want a good eating experience. So maybe some good opportunities. And when you look at the other piece of that overall restaurant performance index, the expectation side, it continues to run relatively strong. It came in at 102.2 in the January report.
So do we take from that expectations number that consumers and restaurant goers and are also optimistic about their ability to enjoy and eat out and patron these restaurants as well?
Yeah, absolutely. As we think about who we're surveying here, surveying those restaurants, it tells you that a lot of them are ready and expect consumers are going to want to return with hopefully a kind of gangbusters, if you will. And again, I think that gives us some opportunity. For me, it's going to be interesting to watch the trade-off between grocery store demand and restaurant demand as we maybe get beyond the worst of COVID. Do we end up with a situation where both continue to be strong? And one could tell the story that we learned how to eat more grocery store product that we won't go away from quite so fast as maybe we would have in the past. And so maybe we get stronger total demand, which is really, I think, could be helpful to us.
Does it also potentially, in that scenario, do we also then see that the dine in and like drive up that maintains and adds some additional forms of revenue or additional segments of demand, but we also continue to see, I mean, like in our perfect world, do we continue to see strong demand at the grocery store, but then also for services like your door delivery services, but then also you're picking up and consuming from restaurants that way as well?
Yeah, so I go more flexibility, and a lot of times I will remind us that having a lot of countries we want to export product to is a risk management strategy. Having different outlets for the domestic side of this equation to me is also good risk management. If you think back to where we were in late March, early April of 2020, where we're kind of in that shutdown mode, we didn't know how to use carry out and delivery as well as we do today. And so if we were to revisit, let's hope we don't, but if we were to revisit, I think we have a lot less strain on the meat side of this equation than we had in 2020 as a result of COVID-19. So all of that to me is really good news. And I don't think we lose any of those. I guess my other point here, if the recovery happens as we think it might, if I'm a cattle producer, I sit here and I go, that's a win. And I say that because as consumers go out, they're going to go, hey, I want a really good meal. And that really good meal probably says steak first. And so that beef demand, and again, as you look at the choice beef cutout value that's running well above year ago levels, some of that I think is already starting to show through in the data that we have today.
And not just demand for beef, demand for high quality beef has been fantastic.
So we're learning how good that high quality beef is, even at the grocery store side, and consumers are willing to pay a premium for that product. I think we might have introduced more consumers to just how good of an eating experience that highest quality beef can be. And it might spell a lot more optimism for those cattle able to grade upper choice and prime than we've even seen in the past. So maybe some really good opportunities as 2021 unfolds. I guess I'll take the other side, since I'm a good economist, of my only concern at this point is just how much money are in consumers' pockets. They may eat out and be ready to eat out right away, but if they don't have a lot of income in their pockets, that might be the kind of drag that we get later here in 2021.
I think my husband has been picking up prime briskets because they've been so reasonably priced, but just the amount of high quality beef is, and I think it's a reminder to a conversation we've had several times where genetics and investing in genetics and your herd is also an easy way to manage risk as well.
I say always a great strategy is put products in front of consumers that they want, not that we want to produce. We want the products they want to consume, and if you do that, it's a win. And I think the cattle industry has certainly benefited, especially in a kind of long-term discussion. As you think back to the 90s of just how weak beef demand was, it was not a fun time to be in the cattle industry. Yet you look today, and we've seen, again, really strong demand that I think has kept prices higher than otherwise would be the case.
Scott, that'll do it for us today. As we look ahead to next week, what reports will we be chatting about next Friday?
Yeah, late in the week, we're going to get inventory of U.S. and Canada cattle and hogs report out, and then we finish next week with a jobs report.
Hopefully some good news for us to talk about then. Great to see you.
Likewise, Megan.
All right, so our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can also submit questions and subscribe there. And for all of the great Brownfield podcasts, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.